on the CME trading floor. So, we are just going to have a quick run through of GameStop. They have their earnings out late today after the close. So you have a small window, a couple of hours, of which to do some of these trades. Before I go into that, just a quick look around the market. S&P is basically unchanged, up small, volatility up small there. So far in the rate market, rates are a bit higher this morning, even after the extra revisions to the jobs reports. But mixed across the board, really, as far as volatility goes as well, but rates are a bit higher. So anyway, on to GameStop. So, bear with me 1 second. So, here we have a big boy run, and what we're going to do here, I'll just go back here. So, we are. One thing I've put out in my previous posts, we do not look to make money on the earnings report itself. What we are doing is we are looking to capture the trend that comes from the earnings report. We're not in this to flip your money and make your fortune in 24 hours or less. We are looking to make you a winning trader, and so this means you're not going to be making money focusing on instant gratification. You're looking at capturing trends, and so therefore all of our trades are going to be longer term. They're not going to be single day, overnight, 1 day options or 0 day options. You will not hear that from me. To me, I think they are a wild punt. You might as well just go to the horse races and just subsidy money on there. However, when educated and you look at trends and you can capture them, there are great ways, in many ways, to skin the cat. And so we are looking at not that far out. We're going to go 35, just over a month from now. So your trade is going to basically be a 1 month trade. That's what we're looking at. And we're going to target here, as you can see here, $18 for the downside and $32 for the upside, which are both fairly achievable. Looking at the downside, and our system will go through like the AI will pick up 1.5 billion iterations of different trades. Some of them are going to be more risky than others if you are doing ratio spreads. So what I like to do is click on vanilla. Vanilla will isolate these trades down to very simple basic trades, not do ratio spreads that have potentially a lot more exposure. We're looking to make an investment, and that investment is all you can lose. So with that, funnily enough, the system will generally pick out various combinations. In this instance, though, it just likes the 20 puts, things you can make some decent return on that on a down move, and then we'll click on that. You can see here where it will start to kick in for you. I mean, you're going to start to make money on this trade on the move down towards 20, and obviously start to clock in, turn more aggressively, it goes lower. At the moment, it theos around 56 cents, but you have to account for slippage and costs, which is why when we see here, we put in your entry price at around 70 cents. We think that will cover in various things, and then we're not looking at the ball out of the park. We just want you to get in at 70 cents and out on the $1.92. We think that's very achievable, and so for a downside play, it's just buy the 20 point. That's the trade for an October expiration. Upside offers slightly more options for you. Again, I'm going to go more vanilla on here. As you can see from some of the trades, it also likes picking out things like the 28 calls, just outright I'm kind of liking the call spreads. The one here, as you can see here, the 28.35 call spread. Just on the percentage return, and you're outlaying half as much as you would do just on the outright call, while offering you more potential upside. I mean, GameStop could go to anything, as we've seen historically in the past, but I just like this call spread. It's more realistic. When you look at the actual chart of GameStop, you know, yes, we had the crazy times back in 2020 where it flew up here, but for the most part, it's actually been pretty low volatility for the last year. Hasn't really gone much, even though it's been mentioned many times. But as you can see here, it's been in a range of like 22 to 25 since June at least. Anyway, we did have that spike up to 35 earlier on in the year, but yeah, there's that one there. The call spread, as far as where it sits, relatively speaking, it's 26% up. What we do here is that we look at a spread or an option that is exactly equidistant out the money and the same amount of time. So what we do is that we linear fit the volatility between strikes. So I look at what the theo value of this call spread or call would be the same percentage out the money as it's been historically. So say, for example, if stock was trading 100 and I'm looking at 110 call, it's 10% higher. I will look at, even if it's 50, I'm going to look at something that's 10% higher for comparison. And that way, it really gives you a good idea of where value is and whether or not it's another form of backtesting, effectively, to validate the trade. And by doing it this way, we can look and see whether or not it's cheap or expensive to where it has been before. And in this instance, it's in this 26th percentile on the call spread. As you can see here on this chart here, which we can maximise on, showing that this trade, due to skew movements and vol, is historically not too bad. So yeah, so there you go. Downside, quite simply, I wouldn't even bother with that, just do the 20 put. I think that's probably going to be the best bet. And then for the upside trade, which we're targeting 32, again, I'll go more vanilla. But me personally would pick the 28.35 call spread or bull spread, or it's different terminology depending on which market you're in. But I like this trade, getting in at around 55 cents after costs and getting out at $3.70 hold. Anyway, you can access all of this on www.leviathanfm.com. We've tried to make it as sensible, which is once again www.leviathanfm.com, and we've tried to make this as user friendly as possible. We don't have the execution built in the system yet. That will be coming, which is also why the membership, as you see, there is only $1 per month. This is only so that we know that we won't steal our shit. So it's basically free. This is a tool that is used by institutions and now we're using it for ourselves and built it over many years. And if you have any questions about it, feel free to email me or DM me, and we'll be putting out any stock request that you may wish us to do a run on, or commodity or index. If you wish to do that, just again DM me and we'll do a run for you and pop it in your inbox. Anyway, other than that, as I always say, better be lucky than be good. So to everyone out there, best of luck.